Hello to everyone. Today I am here with Financial Statement Analysis Part 7. If you are interested to have update videos on banking and finance related topics, please do subscribe my channel. In the previous lectures, we have discussed about the four categories of the ratio. Today we are going to discuss the trend analysis, or it is also called the comparative analysis. For usually we go for 3 to 5 years. Here we are going to discuss a of trend for the different variables of the balance sheet and thereafter for the income statement. It's a 3 years comparison. Here, first of all, we can observe that the stored spares and the other consumables having a significant change. It means it increases about 6.6 million to 10.5 million. Thereafter, they have an increase of 11.2 million. Now we will have to observe or find the reason why the company increases stored spares and other consumables by this significant figure. Thereafter, we can observe stocks and trade. During the first 2 years, it's a nominal increase, but in the third year, you can find a significant increase. It is from 3.1% to 7.2%. So it's a significant increase. You will have to find the reason. Further, you can observe receivables. It decreased for the second year, but having again increasing trend in the third year. You should have to find the reason why the account receivable decreased in the second year and why having significant increase in the third year. Similarly, loans and the advances, it has almost a slightly increase in the second year and a slight decrease in third year. So other variables, we can observe the other receivables. In the third year, there you can find a significant increase. So you will have to, again, I am telling you, you will have to find the reason. One more thing that is important is if you have increase in inventory, receivables, and payables, they have a direct relation with the sales and cost of goods sold. So you will have to observe the relation between the sales and cost of goods sold in both cases. Here we have non-current assets, plant equipment. Yes, in the third year you will find addition in the plant and equipment. In the second year, we have also having some addition, but in the third year, you must have added some significant asset to your organization. So on one side, we are observing the increase in the stored spare and the other consumable and inventories and account receivable. Here we have find increase in the tangible assets as well. It means company having added some revenue generating asset to their company. Because of that, you can find the increase in all these variables. So we will have to check either our assessment is right or not. We should go for the notes of these variables in order to find which type of the assets are added and why receivables and inventories are significantly increased. Thereafter, we have the liability side. First of all, trade and other payables, you can find slight changes. On the other side, current portion of the long term. Here we can observe that they are not more depending on the financing. Short-term loans, a significant part. It remains a slightly increasing trend, and there is no major change in case of our current liabilities. Whereas in case of our long-term loans, you can find a significant change in third year. That is from 2.9 million to 14 million. It's maybe because of the addition of the machinery to the tangible assets. Because of that, you can find a significant change in third year. Further, authorized capital, there is no change now. Paid up capital, there is no change. Reserves are increased. It means it might be a specific reserve. You want certain extension in your organization for that particular extension you might have keeping or generating these types of the reserve that you will have to dig and find the reason from the notes to the financial statements. Thereafter, we can observe the income statement. Here you can clearly see the gross sales are increased from the second year and then again in the third year. In a similar way, there are rebate, incentive, and the commission, and net sales are also showing an increasing trend for the second and the third year. Cost of goods sold, it is also increasing. When sales are increasing, cost will also increase. Gross profit is also increasing. General and administrative expenses, definitely with the growth, it will showing an increasing trend as well. Selling and distribution, it's also increasing, but you will find a major increase in the second year, then slightly decrease in the third year. You will have to find the reason why it's significantly increased second year and how you manage to decrease it in the third year. It's important for you. There is other income. It's also showing a major change for the second and then third year. You will have to find which type of the other income they are generating. Similarly, above to it, we have the other expenses. There are also a significant change in third year, and again a significant change in second year, and thereafter a significant change in third year. You will have to find the reason for that. On the basis of that, the operating profit is increased. Financial cost, definitely when you have certain addition to the loans, financial cost will automatically increase. Anyhow, the net profit having a significant change in the second year and slightly change in the third year. Again, I want to tell you that the job of the analyst is to dig the reason for the changes and have to compare your company's comparative analysis with industrial analysis and of best performing organization analysis. That will help you in order to strengthen your organization or to find the weaknesses of your organization as compared to the best performing, or you can introduce further measures to bring improvement within the organization. Thank you very much. See you again with the upcoming video on the same topic, that is financial statement analysis, very soon.